Hi everyone, Behrooz here, worker with Toronto Real Estate Board, and in this video I'm very happy to record the long version of my understanding of the stats of 2023 in general, but in specifics we are going to delve into the stats of May of 2023. I can report to you that the pace of price appreciation has tampered down a little bit. And that might be the result of a rate increase or an announcement that everyone was sure in May that Bank of Canada is going to increase another rate. But in reality, we have to look at what is believed to be a dynamic change in the real estate market. So if you are a buyer in the summer of 2023, this video might be very useful to you, same as if you are a seller, which some data might be very shocking to you in the beginning, but if you are hitting the market, it might result into the disappointment. So I encourage you to review this video to the end of it. And please, if you have any question in specific about your neighborhood that you are in, about the city or town in GTA that you are in, or if you are interested to buy in, give us a call. We can help navigate the market with you in more specific. But without further ado, I'm gonna delve into what's called a half-year review of what's been happening in 2023 in terms of the real estate transactions and my understanding of how to navigate the rest of the year. In May of 2023, what we had was that average sales stats of that specific month was very close to the same month of 2022. And that is a significant alert for all of us, whether we are a buyer or we are a seller in this market. It doesn't matter how much you understand the market or how interested you are in the real estate. This is significant because the prices in a 5% and a change interest rate environment would be almost the same as an environment where the interest rates were close to 3%. And that is significant. You have to understand how this severity of the lack of supply in the GTA area is going to play itself in the future as well. And we are in the shortage of housing. But if you're breaking that down into the details, that's where the caveat is. That's where you can decide whether transacting the real estate in this year would be for you to your benefit, or you better wait for a further accumulation of wealth if you're a homeowner, or further or larger sum of that you can use for your down payment. Because the reality is that if you're buying a real estate, because that's a long-term investment, you have to be wary that this might get you stuck in something that you cannot even afford. So please understand that the dynamic of real estate that we are talking in these videos are for people who can afford, and we are not at any capacity or at any environment encourage you to jump into the real estate because the prices are jumping, or transact in real estate because the prices are appreciating by 3, 4, 5% per month, which could be a reality for the next while for us. But let's delve into that. Aside from a 1.2 million, close to 1.2 million average sales number in the month of May, we do have year-to-date average, which is close to 1.5 or 1.14, which is 10% less than last year's same period of time. So last year's half a year was almost close to a million and two and change, but this year we are closer to 1,000,001 and change. With that, let's go into the stats for the Toronto. For Toronto, you'll see that the prices are more stable. Why? Because we do have more variety of housing, which is a necessity of an ever-growing region or a city. Still, we are in a short supply, but the reality is that every other city is also looking at the model that Toronto has pioneered, and we have to have a hope in this reality that the price is gonna go down. But in Toronto, we also, because of the fact that we do have variety of housing, we have more property, more inventory to transact in. And that is the key figure that you always have to look at if you're looking for investment, or if you're a budget buyer looking to manage your budget and manage your expectation based on that reality. Because if the inventory is low, such as the inventory that we have in Durham region, places like Oshawa, Pickering, if you're breaking them down further, you will see how severe the prices are increasing. However, I have to tell you that the dynamic of the market is pretty strange. Why? Because if the prices of far east in GTA area are almost the same as the prices are center core or a little bit midtown of Toronto, whether they are in the same category of housing or not, that's for the further discussion. But if the prices in further east, the prices of further west are closer to prices of Toronto, we know the reality is that Toronto is a hub for business, for employment, for entertainment. So in reality, people are coming back and the prices are stabilizing despite the fact that the inventories are low. Aside from that, I wanted to ask you to further investigate your options, whether you are a buyer or seller who wants to downsize, of looking at the stats in the condo sector. In the condo sector, we have more or less more or less fluctuations that are more reasonable. The reality is that if you are a downsizer today, you shouldn't be looking at a detached property in order for you to save up enough money for the longer period of time. By that I mean that, for instance, if you're looking at the Mississauga numbers, your average home in Mississauga would sell for close to $1,140,000 in May of 2023. Whereas if you want to downsize, going into a condo, an average condo would cost you something close to $635 to $640, depending on the size of how much downsizing you want to do. This seemed to be a very reasonable proposal for somebody like you to look at, to entertain. But if you're going back to the GTA in general, you'll understand that in GTA, we do have a lack of supply, in the fact that we do have almost 1 month, close to 1.3 months of inventory, which is pretty low for a 9 to 10,000 transaction per average month of the GTA in total, where you'll see we do have closer to 100, 130 transactions as an expectation to have for the full year around. By looking at that, you'll see how much market has shrunk, because that 130,000 transaction, which would be an average a layman person would look at, if by just adding up the numbers that we have on the stats, is now close to 65,000 year over year. And that means that the interest rate pressure has been working and is in effect. Why isn't it showing itself in the price averages? And that is because of the lack of inventory that we have. So if you go back to my previous videos, you understand that there is one factor that is an economy, which translates itself into the interest rates of the mortgages, how affordability works. The other factor is how supply and demand work. Now, I'm gonna wrap up this video by telling you that when these two collide, we do have a perfect market. However, what we are seeing right now is an imperfect, immature, and ready to burst market, which would shoot the prices higher and higher. What is in hope is that we are seeing gradually the inventory is piling up. That might be the result, as I said in the beginning of the video, that might be the result of increases in the interest rates and the change of a tone of Bank of Canada. But in reality, prices are less affordable and not affordable at all for an average buyer to buy, whether in the condo sector or in the freehold sector. They might buy by force in either of these categories, but the reality is that prices are not affordable. To how much we are going to shoot the prices higher this year, my expectation is that more or less we are going to have the same prices as we are seeing at the end of month of May in the Toronto GTA area, which is close to 1.2. And in reality, if the inventory starts to pile up more than what's expected, you will see a little bit more price correction this year. But because we're going to have no eventful rest of the year or 6 months of uneventful economic data, uneventful real estate data, which we are not seeing that huge of development being finished by the end of the year, the first scenario, which would be that the prices are going to stay more or less the same thing, which I'm going to end this video by telling you that at the same prices, a family should have a free income of close to $170,000 per year, free income with no debt payments in it, to afford that average price of the GTA. So think about that. And if you need any further advice with your neighborhood of your choice, with the neighborhood that you're living in, for the prices, for the market evaluation, I'm always available on my cell phone and on Instagram and YouTube. I hope you have a wonderful summer this year without any diseases, without any pandemic, without any events of that are going to impede you from doing certain stuff and having a fun summer. We should see you on the next video. Have a wonderful day. Bye-bye.